Small business owners and entrepreneurs are excellent at running their own businesses, but when it comes to accounting, sometimes there are mistakes that are made, and this could cause tens and thousands of dollars in losses. Losses can come in many different ways, one of which is loss of time, which leads to decrease in revenue, and then having to pay accounting firms extra in order to clean up the books later on, or late filings or failed audits with CRA, penalties on taxes, maybe even reassessments where you end up having to pay a lot more taxes than you might have needed. As a CPA who's had an opportunity to work with many different type of businesses, I would love to go through some common mistakes that are made by small business owners and help educate so these mistakes can be avoided. Mixing business and personal transactions together. This might sound simple, but it's actually very common. Let's look at how this impacts two different type of businesses: sole proprietorships and corporations. Sole proprietorship is basically running a business under your own name. Therefore, we have the option of having your own debit and credit card within your own name, and this usually leads to transactions being mixed together. When everything is mixed in, it's very hard to differentiate between which transactions were personal in nature and which were business-related transactions. The differentiation is especially important at the end of the year when we're ready to prepare for tax returns. What I'd recommend is creating a separate checking account and dedicating a separate credit card only for the sole proprietorship business. So all of the transactions are contained within these identified distinct accounts. When it comes to checking accounts, there are many banks that offer free checking accounts at a personal level. Three of them are Tangerine, Simply, and EQ Bank. I've personally used Tangerine and also EQ Bank, so I know they work very well. Tangerine actually is very exceptional. I've been using it for many years now, and I would highly recommend Tangerine Bank. And when it comes to credit cards, most people have multiple credit cards anyways. So it's very easy to simply dedicate one credit card to your sole proprietorship and use that only for the business transactions. With a corporation, it's very important to have a separate corporate bank account and also a separate credit card. Not only should the bank account be dedicated to the business, it should also be under the corporation name. You can simply go to any major bank and give them the articles of incorporation, and they'll be able to help you create a bank account for your corporation. Sometimes it's tough to get a credit card for the corporation if it doesn't have a long history with a large limit. And a lot of businesses do need about 10,000 or more to be able to spend on the businesses. And so if this is not a possibility, you can use a personal credit card, but I would dedicate that only for the business and not use that for any personal expenses. So all of those transactions are dedicated only for the business in that credit card. The other benefit of that is potentially you could use that credit card to gather points or air miles or cash back, however you would like to set up. That's also a possibility. Ignoring the GST rules in Canada. GST rules can be very complicated, and depending on the type of business and the stage of the business, it's very important to make sure you know what you're doing when it comes to your sales tax compliance requirements. Adding to the complexity, there could also be provincial taxes, but at this point, we will only cover the GST as that applies to almost every single business in Canada. One of the most important things to remember with GST is to actually register for the GST when you are required to do so. The most famous is the $30,000 rule. If you cross that threshold in the last quarter, so if you had revenue over 30,000 in the last quarter or in the last 4 quarters on a rolling basis, then you are required to register and collect the GST. If you were required to register and you did not end up registering and you were required to collect GST because you had crossed the threshold, you are at a risk of having to pay it out of pocket, and that could cut your margins by, let's say, 13% in Ontario. The other important thing to remember is claiming the expenses or deductions against the HST properly. These are called input tax credits. If good bookkeeping is not in place, you might be deducting too much or too little, which is a problem of its own, and this could cause problems later on. GST audits and reviews happen all the time, and if the deductions are not able to be backed up, there could be a surprise tax bill that could be pending, which you might not have expected. I would recommend having a strong accounting firm who has good systems and processes in place, who can thoroughly make sure that your GST compliance is being done properly and making sure that all the transactions, HST, and the deductions that are required are being allocated correctly, so you don't have any of these issues if CRA ever comes to ask questions. No backup for your transactions like receipts or invoice. CRA requires that you maintain the proof or source documents for at least 6 years after you have done the transaction. The most common issues when it comes to keeping the documents is that the transactions might not be kept because the organization is not to the level that is required, or the documents might be there, but over the years, because of the aging, the ink is fading away, or there are times when payments are made in cash, but there's no documents backing up what those payments were. So there might be times when you had to take out cash from your business bank account and use that for some business expenses, but you never ended up getting any documents to back those transactions up, and then you end up expensing them. So this can be problematic. The best thing to do in this situation is to use technology and streamline the receipt and invoice tracking. All of the apps that are involved in this space work in a similar way. You have 3 different ways of uploading the documents to this app, which then connects to your accounting system. The number one way is basically to take a picture of the invoice or the receipt after you've done a transaction. So for example, let's say you went out with a client to a restaurant to have a meal, and then you get the receipt after. You basically take your phone and you take a picture. The second way is to get the receipts in the application through email. So those can be emailed directly to a dedicated email that's for your business. And this is particularly handy if you get invoices directly in your inbox. There could be rules that are created to forward those invoices to the software. The third way is through the computer. If you have a bunch of documents, those can be uploaded. So for these, we use Dext or HubDoc. Both work exceptionally well, and depending on the client, we will choose one or the other. Only doing bookkeeping at tax time. Doing the bookkeeping at the end of the year can make it a very chaotic process for everybody involved. You might not even remember what the transactions were related to, or the backup documents might not be there, which could risk allocating the transactions incorrectly. In this case, you might forget what the transactions were for, or you might not be able to find the source documents like the invoices or receipts, and this could lead to accounting and bookkeeping that is not accurate. At the end of the day, if the accounting is incorrect, then this can lead to inaccurate tax returns, or you might be missing out on some expenses or HST, which is not allocated properly. So I personally recommend bookkeeping being done monthly or on a quarterly basis. This allows for all the transactions to be identified properly and reduces any chance of inaccuracies. And if you're worried about having to spend a lot of time on a monthly basis or a quarterly basis, I can assure you, if there's a good accounting firm in place and they have good processes and procedures, it will take you less than an hour to respond to any requests and get the bookkeeping done properly. In this case, it's very important to use software to automate, which will ensure timeliness and accuracy. Not asking for help early enough. Small business owners always wear multiple hats, and sometimes they might not be able to realize that the bookkeeping that they have potentially be doing in the beginning of the business has outgrown their capacity to be able to continue doing it properly. Attempting to do it all by yourself when your business has grown will lead to inaccuracies and wasted time that can be spent better in actually growing your business and increasing the top line. As an entrepreneur, it's definitely important to look at your expenses and try to minimize it as efficiently as possible. But it's also important to do a cost-benefit analysis to see if the cost savings is actually being worthwhile. There are some signs where you can evaluate to assess if you actually need help. 3 of them come to mind. One is your bookkeeping is not up to date as of, let's say, 2 or 3 months already. You might not know your profitability because your financials are not being prepared, and you might not be sure about what's going on with your HST. Will you get a refund? Will it be payable? How much of it might be payable? Or your employees might not be getting paid on time, or they're not being paid accurately, and there's a lot of errors in place. So these are some of the signs I would watch out for. Therefore, it's important to not wait till the end of the year or till tax season. Talk to a CPA or a bookkeeper early in your business journey to see if there might be potential to offload this responsibility and get it done properly. Someone who can actually set up proper systems in place, save you time, money, and cost and compliance. I hope this will help you avoid some common pitfalls that I come across as a CPA working with small business owners. If you found this helpful, please share the video with other entrepreneurs. Hit the subscribe button and the alert button. I'll be putting out a lot of videos related to finance, and I hope I'll be able to add a lot of value to your financial journey.